Greetings to another market closing live stream, and cheers to the monster. We must talk about what the Federal Reserve has just said. So it was very boring. As usual, there was the classic Elizabeth Warren complaining and the trading scandal nonsense and the resignations and better ethics. Look, I care about the market stuff. So that's what we're going to talk about here. And I'm going to give you a summary of what Jerome Powell just said, which is important because tomorrow we've got something coming up, which we'll also talk about. And then we'll see what's going on with the sticks. Okay, Jerome Powell talked about these lingering supply chain issues and why we're continuing to see inflation. And that is because the Federal Reserve believed that supply chain issues would clear, quote, substantially more quickly, end quote, than they actually did. And the reason these supply chain issues are lasting longer is in part due to Delta and Omicron, potentially solely due to Omicron and Delta. But it's also exacerbated by a slower return of workers. And one of the things that was actually very positive, bullish, that Jerome Powell said was the following quote, okay? This, out of the entire thing, if there's any freaking thing you listen to from the entire Fed hearing, it is that you got about 2 weeks to use that coupon code down below to join the program. I'm building your own. Sorry. You got to put it in somewhere. Okay. Quote, to get to the kind of very strong labor market we want with high participation, it is going to take a long expansion. Okay, that quote there, full stop, best thing we could have heard from the Powell. Why? Because what he's saying is, look, we're not trying to crash the market. We're not trying to cause a recession. Even though jobs are coming in strong, we need to get participation high. And the recovery of participation is moving very slowly. But the only way we can get a long expansion is with price stability. So what he's actually saying is, don't think of me as taking away the punch bowl. Think of the punch bowl as having spilled a little bit, created a little bit of a mess, inflation, and he's coming around wiping it up, and he's just cleaning the area around the punch bowl. He's still leaving the punch at the party. He still wants the party to keep going because he wants a lot of people to come to the party, more people to come to the party than are currently at the party. He's like, hey, look, all the people, the 100 people at this party came fast, but I want 120 people at this party. So I got to clean up the punch bowl, AKA I've got to clean up the inflation mess while still keeping the party going and attracting people to this party so more people get inside this dance floor and start participating. This is very bullish. This is actually, in my opinion, one of the best things that Jerome Powell could have said. And it was absolutely incredible. I mean, immediately the stock market moved on this. I was watching this very closely and I'm like, that's it. That right there was what the market wanted to hear. The market doesn't want to hear whether it's a potential or not. I mean, obviously it is a potential. I don't think it is a reality. I don't think it's a likely potential, but the market is to some extent pricing in the potential that we could have 10, 12% inflation and that all these inflation buffs are going to be right about, oh my gosh, we're going to have to raise rates to 13, 14% again, just like we did in the 70s or early 80s rather, actually late 70s, early 80s, when Paul Volcker came in. And we suffered the Volcker reign. I don't think we're in that sort of market again because the catalysts for inflation are entirely different. We're not losing price ceilings. We're not coming off the gold standard. The dollar is strengthening, not weakening. Folks, there are so many things that say we're not going back to Volcker, the Volcker era, which if you don't know what the Volcker era is, it was basically just raising rates to like 15% to just through a bloody recession, destroy inflation, right? And so some of that potential, again, I don't think it's a reality, but some of that potential, or I also don't think it's likely. I think it's less than 20% likely. Some of that is priced into this market. So hearing Jerome Powell say, hey, look, we're trying to set up here for a long expansion. Best freaking phrase he could have said at this entire meeting. Because remember, folks, why does the Fed care about a long expansion? Well, first of all, nobody wants to deal with a recession. But one of the primary motivating factors for a long expansion is getting to something known as max employment. And maximum employment is when you have individuals of all races and sexes at their maximum potential employment. And we're not there right now. We're not even close to that form of max employment. Check this out. We go over here to, this will show you, watch this. I just type in black. Look at this. The white unemployment rate is 3.2%. The black employment rate is 7.1%. That means if you are a black person, you are 2.22 times as likely to be unemployed as a white person. That's the problem. If you are a Hispanic, you are 1.5 times as likely. So, and then Asians only slightly higher. Like Asians, white, pretty similar in terms of employment. Hispanic 1.5 times as likely as a black person to be as a white person to be unemployed, and a black person 2.2 times as likely as a white person to be unemployed. That's big, right? So this is what the Federal Reserve is trying to deal with. Is this sort of disparity in racial employment. Women, I don't actually think women are equal to men. So we actually have sexual equality, maybe not in terms of pay, but in terms of employment right now, or unemployment, and substantial inequality in terms of racial employment. So this is one of the reasons Jerome Powell is trying to make this. I like the, I don't know, you tell me, I like the punch bowl scenario. Jerome Powell is not taking away the punch bowl. He's cleaning up the excess inflation, the mess around the punch bowl, because he wants more people to come to the party, specifically blacks, who are 2.2 times as likely as whites to be unemployed. But everyone to have some improvement in this, right? So he believes that the only way you can do this is by having a long expansion. And so what he needs to do is limit inflation while making sure the party's still going. And even though he is going to phase out or basically dump bonds, reduce the balance sheet sooner and faster, the market is happy with his statement that we're trying to build a long expansion here. Now, that could be very fleeting. People could forget this quote very quickly, but it's always important to remember that the most important thing in the economy, folks, is consumers driving growth, earnings, and ultimately a strong dollar. That is probably the most important thing for the American economy. Strong dollar, consumer growth, and earnings growth. That's number one. That's your top, okay? That's right here at the top. Strong consumers, earnings, strong dollar. The next would be the Fed not trying to vacuum up too much money. So don't dump those bonds too quickly. And then you got rates at the bottom. These are all issues. I would put them in this order. And I think inflation is really just something that contributes to the middle two, rates and the balance sheet runoff. In other words, it is entirely possible that with a statement like this, Fed Chair Jerome Powell could actually potentially U-turn the market's response calculus to inflation, in that maybe the market will stop responding to inflation. Maybe the market will just say, okay, we're on the path to set up for a long expansion. If that means we got to raise rates to kill inflation, fine. But we're on the same page. We all want long expansion. And as long as people have faith in Powell, I think we'll do well. That we don't have to go to recession to combat this inflation. Obviously, if we have a huge miss to the upside on inflation tomorrow, we're screwed. We're going to have a bloodbath of a market tomorrow. We're going to have a disaster of a market, and things are going to suck. So remember, the inflation expectation for tomorrow is 7.1%. That is up from 6.8% in November. Right now we're getting the December numbers. Even though they're coming out in January, we're getting the December numbers. So 7.1% is the expectation. We come in at 7.2%. Is it really going to matter? Probably not. Maybe the market's flat or whatever. We're pretty close to expectations. We come in at like 7.5 or 8%. This market's going down. We're going down, and it's going to suck. If the market ultimately, or if inflation comes in at like honestly, anything with a 6 in the front, we could start a potential, and I don't know how long it'll last, but we could start a small rally, maybe a longer lasting rally. I don't know, but we could potentially start a rally in small caps and other companies that have sold off, which to some extent we are already seeing today. And that's what's really interesting, because if you pop over to the market right now, you've got Arrival up 11%, DWAC. I mean, this is full risk on right here, 13%, next door 13%. Tiny, look at these tiny caps right here. JD, the Chinese companies blowing up here right now. JD, Baba's been doing very well. Xpeng's up 7%. Li Auto. I mean, this is the risk-based playing is up today. Robinhood's up 6%. What do we have down? COVID plays. Moderna, safety play like a Domino's, which is also a COVID play. Not much. I mean, Cheesecake down 0.95%. I mean, there's not much that's down. Volatility's down. Moderna, like, just stay away from the vaccine manufacturers. Stay away from this garbage. And look, I think in the future, maybe in like 2 years, it could be interesting to invest in Moderna as like a therapeutics play or like a cancer play or whatever. Oh, cancer, might. You can't wish that upon anyone, and the heart goes out to anybody fighting that or knowing somebody who has to deal with that. But anyway, this is not a bad day. The market's doing very, very well today. Tesla's flat, which is fine. Tesla hasn't been that terribly damaged. Bitcoin is recovering. We keep getting rejected off of 43 though, not very clearly, but we continue to get rejected at about 43. So we'll see what happens here. So let's see here. Kevin, look at how BTC getting rejected at the 50-day moving at 50-day on the 4-hour. Okay, let me see. This is not the 50-day then. 50 on the 50. You are so right. Yeah, look at that. Reject. And then that's where we are now. We'll see. That's interesting. Okay. Apple investing in small cap stocks. I don't know if that's true, but if it is, that wouldn't surprise me. Chances of a month-to-month inflation being less despite higher year-over-year inflation. Oh, very good question. That's a very good question. So the question is asking me, what do I think about, look, year-over-year inflation might be high, right? 7.1%. But what about the estimates for month-over-month MOM? So CPI MOM, the prior release was 0.8, which is a 9.6% annualized, which is just like, that's insane. The current estimate is actually 0.4, which that's good. 0.4, well, I mean, it's not good, but it's better than this, though. It's a 4.8% annualized rate. And remember, don't use exponents on this. You just multiply by 12. Don't make your life more complicated. You're trying to figure out the speed. You're not trying to predict full year. Yeah, 0.4, that's good. Obviously, like, oh my gosh, you know what could rocket this market? Write this down. Like, look, here's what we're going to do. I'm going to do it with you, because if you listened, you bought these Post-it notes. I don't remember if I talked about that in the course member live stream. We talk about a lot of things in the course member live streams. You're missing out if you're not part of those. But I think you already, at this point, you realize you're missing out. I don't know. Maybe somebody can give me a reason why you're not buying the course. You can write it down in the chat. But anyway, okay. I wish I had a marker here. Usually I do. I think Max took it. Anyway, I'm going to write down. First of all, I'm going to write down CPI. We have the expectation. Oh, they lowered it. They lowered it to 7 instead of 7.1. Holy smokes. Okay. James M says Google is free. Anybody in the course, please respond to the Google comment. I did talk about it here. Too expensive. I mean, I respect that. If you bought the dip too much, cash poor. Okay. All right. I respect you buying the dip. Okay. So CPI, they revised it down to 7%. I'm surprised, from 7.1. So they revised it down to 7. And then the MOM, they revised to, it's at 4.4. I'm going to call a rally, okay? Rally if sub 6.7 headline or under 0.2. I'll say under or equal to. Under or equal 0.2. I'm going to put that right over here. Right. No, that's inconvenient. I'll put it right there. Google can't give you the mentality of the psychology of money. Boom! Course is helpful. Course member live streams, gold. Oh, thank you for saying that. I bought the course last year. It's been my best investment. Oh, y'all so nice. I hope to buy the course at the end of the year if I can make enough gains this year. Okay. Google doesn't give you insight tips and advice. Kevin gives you personally in the course. Oh, and in the course. Oh, that's awesome. Thank you. That's so cool. Their loss. Enjoy your free Google. That's awesome. It's a drop in the bucket for the returns you get. Oh, y'all so nice. That's freaking awesome. Really, really cool. Analysis paralysis with Google. Kevin gives it straight focused. Oh, too nice. Google does not give you buy sellers. Oh, thank you. Okay. Good. So I'm calling for a rally if we get either under 6.7 year over year or under or equal to 0.2 on CPI for month over month. Jan says, bought the course last week. Great investment. Live stream is very helpful. Thank you. Google does not give Kevin Newts. You can't be telling people. Thank you. Appreciate it. Okay, so I'm really surprised that they reduced. Thanks, Corset Creator. I'm really surprised that they reduced the inflation expectation from 7.1 to 7. I'm happy about that because I was a little nervous when I saw 7.1. But yeah. Do I have a payment plan? You could check out with PayPal, and it lets you pay in 4. It does a payment plan. Buy now, pay later for Kevin's course. Yeah. Okay. So let's go back to the market. Let's see what's going on. Somebody says the SPY is falling into the close. It doesn't surprise me to see stuff like that because there's going to be a lot of fear going in tomorrow. I mean, that's barely a movement down. In fair, you are right, but it's not bad. It would not surprise me to see some people take tendies off the table. Maybe not even tendies, just take their money off the table because the liquidity is going to be terrible in the pre-market tomorrow. You're really going to. I wish I could add a firm. I really wish I could. That would be up to Teachable. But anyway, yeah, I mean, look, if I were a fund and I was like, I need to take some liquidity off of the table to have some to potentially buy the dip after a CPI miss tomorrow or just as a hedge, yeah, I'd sell into the close too. I totally get that. So it does make sense that we are going to see some form of limitation on this. Oh, Bark, 27%. That's cool. Bark box. I thought it was 18% not that long ago. Whatever. Dwack 13%. Okay, so is everything falling into the close or just some things? What's going on here? Oh my gosh. You cannot. Oh my gosh. Look at that reject on Lemonade. It is so freaking perfect. Oh my gosh. It was within 2 pennies. Again, like I get the comments all the time. People are like, oh, it's so funny seeing Kevin freak out when his TA works. It's just because there's so many people that are like, oh, TA doesn't work. And I'm like, are you kidding me? Look at this. Within 2 pennies of my line, we get rejected on Lemonade. And I didn't even draw it at $40. I drew it at $40.08. Within 2 freaking pennies. That's amazing. Shows you it works. And then you get the front running over here. Front running, very, very common. Anyway, okay, come on, Lucid. Get over here. Okay, so Lucid. TA works because of algos? I don't care what the reason is. Algos are programmed by computer or by humans. In before you can't make this up. That's funny. OpFi, is OpFi running? That one sold off pretty nicely. 10%. Yeah. Yeah. This is like a Robin Hood, you know? So, okay, good. How about ARK? How's Kathy? Couple percent. It's still crazy that it's at $86. I rolled my January options. So, but I still have my options on ARK and Hood. But I rolled them to I think it was $69. Anyway, not much moving down. Let's look at the indices and bonds for a moment. All right, let's go. NASDAQ Technologies beating all of them. All right. This Patrick Boland comment here, 100% correct. Absolutely brilliantly put. TA works because others care about TA. Pure game theory. Bingo. Absolutely correct. It is all the psychology of money. LOL, the knowledge given from Kevin's course and course live streams is priceless. I've made 6 figures plus from Kevin's stock. Oh, that's awesome. And the tactics. Oh, that's really cool. I'm happy for you. Do I think CPI data is priced in? Well, it depends what it ends up being. You know, I think 7% is priced in. Yeah, that's why I think it's going to be flat. The algos have bought Kevin's course. Time to YOLO into DWAC? No way. It's like poker. Yeah. No sell-off into close. Okay. Well, I mean, that revision down, do institutions know something? That revision down on inflation was telling. That they went from 7.1 to 7. I know it seems minor, but I think that's telling. Let me see here. Yeah, I don't see much of a drop here going into the close. No, see, look at that. Look at that SPY rebound into the close. That's enthusiasm. Look at that, even NASDAQ. That's incredible. Yeah. No, this is very good, very good. We don't have earnings today, do we? I don't think earnings really begin until Friday morning, bank earnings. No, I think we have the airlines Thursday after the close. Today's, I don't know what that is. That doesn't matter. What is this one? Wednesday, Jefferies Financial. I don't really care about them. Sorry. Oh, Taiwan Semiconductor and Delta. But Taiwan and Delta both report in the morning on Thursday. And then morning reports for Friday, JP Morgan, BlackRock, Wells, Citi, First Rep. And then, Tuesday. Why is there no Monday? Is the market closed Monday? Stock market closures. I don't know. There's no Monday on this calendar. Oh, it is. Oh, the market is closed on Monday. It's a 3-day weekend. Dang it. I hate 3-day weekends. MLK Day, that's right. And I respect MLK Day. But I hate 3-day weekends. It's so boring. Oh my gosh. Let's go skiing. Skiing for the 3-day weekend? That's tempting. Oh, jeez. Okay, anyway. Where's the best snow right now? Somebody give me the best snow. I need a snow report. Stat. All right. EXPI, 9%. Nice move back to 30 right here. I mean, some of these just got burned. So it's not like we can really be that excited about some of these moves today. Some of them, though, because we bought the dip, did very well today. I mean, I like the little pop-up off of TD here, or a trade desk. I got trade desk at like $75 yesterday. Lake Tahoe. Ooh. Course member ski trip. Park City, Utah. Yeah, I like Park City a lot. Utah killing it. Yeah, is the snow good right now? Awesome. Okay. All right. Quickly look at BTC and then get the bell here. See if we can get back to that channel on BTC. Waiting. I've been waiting.
Tech, consumer discretionary communication services. And
oh, wow.
All up more than 1%. It's what is the second day in a row of resounding intraday rallies from session lows, following what was, of course, a torrid start to the year last week. S&P.
Hammer. He almost forgot. There we go. He was looking off, and it was kind of like he was trying to look at somebody talking to him. And I think somebody was probably in the distance like, hey, do the hammer. He's like, oh. Anyway, Dow 0.51, S&P 0.92, NASDAQ 1.41, Russ 1.05. I really am hoping that tomorrow we get a start to a small cap rally, because I'm tired of this frustrated market that we've been in for honestly about 6 weeks now. And quite frankly, all of 2021 has just been such a weird. It's been something else. But hey, you know what? If you made some nice tendies today, you bought the dip, you made some nice tendies. Check out that link down below. Use that coupon code. Consider bundling up. The Path course to wealth, that price does double. Usually the courses don't go up that much in price, but that only doubles in a couple weeks because of that course getting released. And when it's on pre-sale and you buy a course with no content in it, it's like you get a better deal. you get a lot off. But anyway, Tesla, not much of a move here on Tesla. 0.59%. Pre-market after hours, it's going to be too early to really tell anything here. I think we had the best possible case scenario here with the Federal Reserve. Very happy about what we had with the Fed. Happy with the market today. Also, honestly, very happy about this inflation expectation rotating down. We could get rug pulled tomorrow. And if we get rugged, I'm going to be very sad. But in the meantime, I'm going to go. Thanks so much for being here, folks.